Hello YouTube again. Today we're going to talk about portfolio diversification. Why is it so important to diversify your net worth and not to put all of your eggs in the same basket? Okay, it's very famous. Everyone talks about it, and we're going to talk about it today as well. So let's read it with this article that I found here was pretty interesting, and we're going to discuss. So, what does it mean to diversify your investments? Investment diversification is akin to the old saying, don't put all your eggs in one basket, just like I said. It is often accomplished by using a set location across your investment portfolio. As the Securities and Exchange Commission explains it, which is a specific thing, a set location involves dividing an investment portfolio among different asset categories, such as stocks, bonds, and cash. The process of determining which mix of assets to hold in your portfolio is a very personal one. The asset allocation that works best for you at any given point in your life will depend largely on your time horizon and your ability to tolerate risk. Um, so again, you've got to understand that risk reward goes together. I always say this in my videos because it is true. So the more you earn, the more you're gonna have to accept that it could potentially increase your risks of losing everything or earning more as well. Because again, if you want more safety, that means that first off, diversification by itself means that you're gonna create more safety. But the consequence, I'm sorry, the consequence of creating more safety um, decreases the amount of percentage that you can generate every month. So for example, let's say We're doing covered call strategy in our stock portfolio, and instead of doing, say for example, you have $100,000. Say if you have $100,000 and you're gonna do $100,000 in one stock. Okay, one you have all of your net worth in one company, and you're doing weekly covered call in this one company. That's a good strategy, but you're not diversified. Again, you're putting all of your eggs in one basket. I'm sorry, but you're earning potentially more money than what you would have earned if you started to split this money in other companies and other stocks. So, for example, say you have the same $100,000 and you split it in 10 different stocks. So now you have like $10,000, for example, or any margin that you choose. But in this case scenario, we have 10,000. You have $10,000 worth of stocks in every single company in every stock, and you're doing covered call in all these stocks. Potentially, you're gonna decrease a lot to the potential of your profit. You're probably not gonna be able to do as much money as you would have done if you had only one stock, right? But you're splitting the risk. You are diminishing the chances of being stuck in a position for a little while, and you're creating a little bit more consistency on the long term because you created a diversified system and you're more protected. So say for example, worst case scenario, one of these companies they go bankrupt, which is very hard, but it could happen. It's very famous. It happened multiple times throughout history, and we're very vulnerable to this because no company is immune to that, but you're safer. So again, the cost that you have to pay for safety is earning less money, and the cost that you have to pay for 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 a higher reward is you have to accept the risk that you could lose everything. So that's just how the system is built. We didn't build the system when they created, because again, it was created like this years ago, before we were born, and it's gonna continue all the way up to your dad and until oh my god, I forgot the word in English. I fucking hate not knowing English, man. Okay, I'm sorry, guys. Let me continue. So let's say the system is gonna continue even though we're dead, and even though our kids are dead, and the kids of their kids are dead, and so on and so forth. So what's the opposite of ancestors? It's the other word for this. It's not the ancestors. It's the other word. But you understood what I'm trying to say, right? Sorry for this. Yes, that was very stupid. Okay, so the system was built for this, right? And when they created it, they had to create it this way. So I feel like it's a system to create protection to protect themselves, because they don't want people to become rich. So they need to create a difficulty to make sure that that's how the economic is going to work and so on and so forth. It's pretty hard to understand how the system works, but that's kind of how it is. So you have to accept that risk reward goes together forever. It's always going to be like this. If you want to make more, you have to accept the risk that you can lose more too. Okay, and if you want to make if you want more safety, you have to accept the fact that you're going to make way less money. But diversifying is one of the greatest ways that you can protect yourself in your investments from any crisis or from anything that could potentially happen in the world. And you're protecting yourself against these factors, right? So diversify across asset classes. So asset classes such as stocks, bonds, and cash generally behave differently under similar market and economic circumstances. Within a broad asset class such as stocks, there are sub asset classes, which include large, small, and mid cap stocks. There are also different styles such as growth, value, and blend of the two, and there are domestic and international stocks as well. Within the international stock umbrella, there are stocks from both developed countries and emerging markets. So again, there are a million ways that you can diversify your income. You can have all of your income in one country. Say, for example, you're a US citizen and you have all of your money into the American stock market. Some people they do it differently. Some people they have a little bit in the US. Some people they have a little bit in Brazil. For example, I'm in Brazil, right? I could have potentially stocks in the US and then in my country. So I'm diversifying even more. If you want to create even more diversification, you can have stocks in the UK or in Europe across companies across Europe and so on and so forth, right? But again, if you diversify too much, then you're going to decrease completely the potential of your income. Okay, and again, if you're investing in stock market or a little higher risk investments, you want a little bit more more income than the fixed income. And if you're going to diversify too much to the point where you're going to make the same amount of interest rate that you would have earned in a fixed income, then you shouldn't even invest in stocks in the first place, right? So there is a balance that you need to find so you don't diversify too much to the point where you lose all of your interest rate potential. And again, not diversified out at all to the point where you could potentially lose all of your money if something really bad happens in worst case scenario. Mm, and here he talks about diversifying globally, diversifying, that's crazy, across industries and sectors, which is again another thing that you have to take into consideration. You're not just gonna diversify randomly, but you need to see across the industries and sectors. Okay, so especially for those investing in stocks, which is what we do the most here, in forex and so on, industries and sectors can have a profound impact on the performance of stocks issued by companies in those sectors. For example, the factors that might influence the performance of a stock in the technology sector could be vastly different from those impacting stocks in the energy sector, and this is so right. So this is why again we need in-depth studying to make sure that we're not putting our money into a wrong stock or doing any creating a bad strategy that's gonna backfire against us on the long term. Okay, and again, you can diversify across bond types. You can diversify using ETFs, which is in itself is already a diversified system already. Again, mutual funds and traded or exchange traded funds, which is ETFs, can be excellent for tools for diversifying your portfolio because they already have multiple companies that they split the money for your safety. Some funds are mixed with different asset classes. These balanced funds generally invest in specified portions of the fund in stocks and in bonds. So again, we could talk about S&P 500 or some of these other stock markets, some of these other things. But basically, that's what we need to understand the importance of diversification. And let's read the last thing. Why is it so important to diversify? Different types of investments behave differently under various economic and market conditions. Diversification among different asset classes and types of investments can help you to mitigate investment risk. Um, and here he explains a little more the pros and cons, which I've already mentioned a few of them. but that's how you would understand a little bit more of how diversification works. So I hope that was just a brief introduction to this. I'm not gonna go too deep in it because I don't want this video to be a 40-minute video or an hour video. I want you to understand just a little bit of the introduction, and then as you watch more videos, we're gonna cover more things and go even deeper and deeper into this until you actually master this whole system here. So you can create a system that generates for you a consistent income for the rest of your life and for your family and so on and so forth. So I hope you liked the video. Please subscribe for more. If you have any suggestions, please comment down below, or any criticism. I know it's hard for me to explain sometimes. I have a few gaps in words because of the language barrier, but I'm trying to do my best to improve my vocabulary or improve the way I express my ideas to you so you can understand a little better. All right. But other than this, guys, thank you so much for watching it. I'll do my best to improve, and I hope you can learn something from this video. Okay. Have a good one. I'll see you in the next video. Bye.